At this point, we will discuss the doctrines of taxation. Doctrines are a school of thought that guides the exercise of the policymaker when it comes to taxation power. So first doctrine, we have prospectivity of tax laws. The Senate or Congress, when exercising taxation power, they should observe this doctrine in that tax laws should not be effective or should not be effected against those transactions or persons or objects in the past. So, a tax law can only be implemented or effected within the present object and the future, and not imposing taxes to any subjects or transactions in the past. Like tax laws, rulings are also implemented or effected prospectively and not retroactively. Rulings are interpretations made by the Commissioner of Internal Revenue of a certain tax law. A ruling is a guide to all taxpayers about the certain provisions of the law. They are effected also like a law, however, it is not a law. So, all rulings, all regulations, or interpretations made by the BIR or the CIR shall also be effected prospectively and not retroactively. If a tax law becomes unconstitutional or becomes void, then the rulings shall also become void because the rulings are interpretation of such law. Next is imprescriptibility of taxes. Taxes are imprescriptible, meaning they cannot expire. For example, if today a taxpayer has an accrued taxes, meaning tax payable, and then in the next month, there is a law exempting him from tax, it doesn't mean that it is an excuse for him to not pay his tax liability in the past. He shall still pay his tax liabilities as long as he is not exempted then. The power of judicial review and the interference of the court. As discussed earlier, the taxation power shall only be exercised by the legislative body of the government. The judiciary and the executive branch cannot make tax laws. However, in case of tax disputes between the government and the taxpayer, the Supreme Court can step in and render its interpretation to settle down the dispute. The next doctrine is equitable recoupment doctrine. An equitable recoupment doctrine is a claim for refund which has been prevented by prescription. For example, if a taxpayer 4 years ago had an overpayment of, let's say, 300,000 because due to honest mistake or error or mistake in computation. So, now, 3 years after, the taxpayer has been assessed by the BIR to pay, let's say, 70,000 pesos. So, the taxpayer remembers suddenly that he had an overpayment of 300,000, let's say, 3 years ago. So, under this scenario, the taxpayer can no longer ask for a refund because the overpayment was made more than 2 years. In our present law, an overpayment may be claimed for refund if the claim was made within 2 years after such overpayment. However, in our case, the taxpayer only recalls the overpayment after 3 years. Therefore, he can no longer ask for a refund. So, that's why equitable recoupment doctrine is not applicable in the Philippines because it is not followed. However, in contrast with equitable recoupment doctrine, under compensation or set-off of taxes, the law allows for a set-off of taxes. Let's say, for example, overpayment and a currently tax due. So, as I have said a while ago, that a claim for refund may be allowed if made within 2 years. So for example, just last year, a taxpayer made an overpayment of 100,000, and then this year the taxpayer has a tax liability of still 100,000. So he may compensate the 100,000 overpayment made a year ago and the tax due of 100,000 today. So it can be pwede siya. However, again, if prescribed, if after 2 years and the taxpayer can no longer claim for compensation or refund. The next is taxpayer suit. A taxpayer suit is a dispute or under litigation made by taxpayer against any officer who have wrongfully done or illegally collected a tax from the taxpayer. So the taxpayer can sue the officer who had made errors or illegal doings. Next is situs of taxation. Under situs of taxation, this doctrine actually follows territoriality limitation. This means that our law or our tax law only operates within our jurisdiction. We cannot tax those people or objects outside the Philippines. In the case of, let's say, the overseas Filipino workers, they are not subject to income tax or to any tax outside the Philippines. If they have acquired properties outside, or if they have transacted outside, our tax law will not operate in the country where such OFW resides. However, of course, the country wherein the OFW resides, of course, will tax the transactions of such person in there. However, if such OFW returns in the Philippines, then such person will now be subject to tax because he or she is now in the Philippines. The next is Martial Dictum Doctrine. Martial Dictum Doctrine underscores the principle, the idea rather, that taxes are a destructive, or taxation power is a destructive power because, as I have said, it is plenary, comprehensive, it is supreme. Taxation power covers everyone, everything, everywhere. So even if naya ka sa province or you're somewhere in the mountains, still you will be subject to tax. That's why somehow it will destroy the right of the taxpayers. For example, our emerging issues today during this pandemic, let's say for example the barter. There was an issue once that barters are subject to taxation, and that is actually correct. That is actually valid, no? Because the law, our tax law, provides that the sale, barter, exchange of goods and properties are subject to tax. So many netizens have reacted negatively against such issuances because, again, under Martial Dictum Doctrine, taxation power is considered as destructive. In contrary, under Rome's doctrine, it says that the taxation power is not always destructive. In fact, it builds. Because without taxation power, we will have nothing to build. We will have no funds to build a peaceful and developed community or society. So this doctrine says the positive side of taxation power. The next is the principle of strictissimi juris. Under strictissimi juris, this doctrine speaks of the veracity of the claims for deductions. Under this doctrine, it says that taxpayers when claiming for tax exemption or expenses or deductions, must prove their rights to claim such exemption or deductions or yeah, because again, the government needs funds, and if everyone is exempted, then there will be no fund. So if you claim to be exempted, if someone claim to be exempted, then he or she must prove to himself that he really is exempted. Therefore, actually today, we require, or the BIR rather requires, certificate of exemption from different government agencies. Let's say, for example, the BMBE, the Barangay Micro Business Enterprise. When you are a small business, or when you have a small business, actually you can be exempted from income taxation, and you have to apply to the city hall and secure for certificate of exemption, because without that certificate, you cannot enjoy the benefits of being a BMBE. You cannot be exempted from income tax. So inga na siya ang balaod nato. So if you claim to be exempted, you should prove that you are exempted. If you claim to be innocent, you should prove that you are innocent. Also, in business, when in computing our income, when we claim for deductions, when we claim for expenses, we should prove that we are entitled to such expenses. Otherwise, it will be void, no? That's why the BIR requires everyone, especially in business, to always ask and claim for receipts, because without those receipts, we cannot claim for expenses. The next is the doctrine of estoppel. Under this doctrine, the government cannot be estopped from the wrongdoings of its officers, and any irregularity made by the officer doing the audit or assessment cannot be estopped to the government. Meaning, we cannot sue the government for the wrong things done by the officer or by its agency. So we can only sue the person or the agency, but not the government in itself, under the doctrine of estoppel. Now let's discuss the aspects of taxation. The aspects of taxation are the stages in the exercise of taxation power. These are, kumbaga, the levels or the phases. There are 3 stages in taxation power. We have the levy, assessment, and collection. So let's discuss each stage individually. The levy. The levy is the imposition or making of tax laws. It is the first level of taxation power wherein the Congress and the Senate work together to come up with a tax bill. So at this point, it is at this point when the object and the situs of tax is determined. It is the responsibility of the Congress and the Senate to appropriately identify who is to be taxed or what is to be taxed, then where and what kind of tax. So this is, kumbaga, the stage wherein the law is being crafted. It is otherwise known as the tax legislation or the policy making. After the policy making, after the Congress and the Senate crafted the bill, the tax bill, and the President has already approved such bill to become a law, then comes the assessment. Assessment begins when the President implements such bill, or such law rather, delegated the task of assessment to the BIR, and then the assessment is the execution of the law by which the correct tax is computed. It is the point of the taxation system where the taxpayers calculate their tax dues. So, kumbaga, this is the point of the taxation power wherein the correct tax is being computed, and so that the taxpayer will pay their taxes due to the government. When the taxpayer erroneously or fraudulently miscalculated the tax due, the BAR would normally assess the taxpayer with the correct tax, plus the corresponding penalty and surcharges. So, for instance, every April 15, all taxpayers, whether individual or corporate taxpayers or partnerships, will pay their income taxes, and that is the deadline. So it doesn't mean that if the taxpayer have already filed and paid his taxes, it doesn't mean that di na siya magbayad og tax or that the BAR will no longer scrutinize the returns being filed. Actually, after the taxpayer filed his income tax returns, the BAR will will look into it, will scrutinize the paper, and will compute whether you really have filed the correct tax. If the BAR found out that na ay miscalculation or error or there was a fraudulent misrepresentation of the figures being declared, then the BAR will compute its own assessment and then will notify the taxpayer that they have erroneously or fraudulently filed the tax. When the BAR assesses the taxpayer is notified to pay the corresponding tax, the deficiency tax, plus the penalty and the surcharges. So later on, in the succeeding lessons, we will learn how to compute the penalties and surcharges. So after the assessment, now comes the collection. The collection is the enforcement of tax for the taxpayer. All taxes must be paid in money. You cannot go to BAR and say, pwede saging na lang akong ibayad. No, you can't say that. You can't say, pwede kuan na lang, lechon na lang, or car na lang. No. All taxes must be paid in money. If the taxpayer fails to pay the tax, the BAR would normally exercise its remedies for the collection of the tax, such as restraint, garnishment, and levy. So, these three things are discussed exhaustively in the succeeding lessons. So, let me give you an example na lang. For example, you have paid the tax, you have filed and paid the tax. But later on, it was found out by the BAR that the tax you paid was actually understated. It was fraudulently misrepresented, and that you have to pay a bigger amount. If you cannot pay such tax, for example, if you don't have enough money to pay the tax, the BAR will pursue every properties you have. So if you have a car, so it will be distrained, no? It will be foreclosed, ibaligya through public auction, and then the proceeds of the foreclosure will be paid to your tax liability. So if your tax liability is, let's say, 600,000, and then the proceeds is only 500,000, so still you have 100,000 deficiency. Then the BAR will exhaust again another action. So it can be garnishment if you have bank deposits, or levy if you have real properties. So every action possible will be conducted by the BAR para lang mabayaran ang imuhang tax nga due. So, if you notice, this levy, assessment, and collection are actually related. These three stages or aspects are related. Levy and assessment comprise the impact of taxation, while tax collection comprises the incidence of taxation. It is considered as impact of taxation because it is a point on which the tax is originally imposed. So this is the levy, and the assessment is actually the time or the period wherein the taxpayer is identified and the tax liability is identified. Taxpayer being identified is under the levy, and tax liability being computed is actually assessment. So that's why it's the impact of taxation. Naa din ha kumbaga ang pain, ang burden wherein the incidence of taxation, it's a point on which the tax burden finally rests or settles down. So, it is the point wherein masettle down na ang liability through collection. So, there are instances wherein the impact and the incidence of taxation rests on the same person, and there are also some instances wherein the impact and incidence of taxation rest on a different person. So, for example, in the case of income tax, in income tax, every taxpayer earning income will be subject to income tax. For example, ikaw, when you become a CPA someday, when you become an employee, or when you become a businessman, you will have income. So the the BAR will assess you and will let you file no sa imuhang income tax, and you should pay your income tax because it is a tax due upon you. So ikaw ang gi-assess, ikaw ang gi-taxan, ikaw ang magbayad. So the impact and the incidence rest upon you. However, there are also instances wherein the impact and incidence rest on different persons. So for example, in the case of the VAT, in the VAT, actually si seller ang mag-shoulder sa VAT na 12%. Siya magbayad sa 12% ng VAT because si seller ang gitaksan. However, since the VAT can be shifted or transferred to another person, the seller may shift the VAT to the buyer. Therefore, si buyer na ang nagbayad sa tax. That's why the impact is on the seller while the incidence is on the buyer. This point, we will discuss the escape from taxation. The escape from taxation are the ways or means to avoid or minimize the impact of taxation, the liability. So this includes tax avoidance or tax minimization and tax evasion or tax dodging. So we'll discuss this one by one. So first, the tax avoidance or tax minimization. These are the use of legal and permissible alternatives or means, such as tax rates or methods, in order to avoid or reduce tax liability. So these are valid, these are legal, and these are permissible. These ways are not against the law. So an example of this is shifting. Shifting of tax is passing on the liability to another person, as in the case of VAT. So si seller, siya dapat ang magbayad sa VAT, pero iyang gipasa kang buyer. So that's it, that is shifting. Next, we have transformation. In transformation, the taxpayer transforms or absorbs, the taxpayer absorbs the payment of the tax, but later on, improved his production or improved his processes to minimize the costs of manufacturing so that ma-recover niya ang iyahang costs or the payment of tax. For example, the taxpayer is assessed of a certain tax, no? And then he paid the tax. So the taxpayer will going to absorb the tax, the payment of the tax, and then spread these costs, these tax among the number of units of produced. So what will happen is, kumbaga, na-absorb sa per unit ng product ang katong tax na gibayad ni manufacturer or ni taxpayer. Mo na siyang in the case of kanang bitong mag-import, di ba normally mas mahal siya because si seller iyang gi-absorb ang iyang ang tax, at the same time pagbaligya niya mas mahal na siya. Or in the case of nganong mas mahal ang mga imported products, or nganong mas mahal ang kanang siyang product, so mo na siya ang transform niya ang tax, absorbing the tax, and then later on iyang gi-appeal sa cost sa iyang production. So Next is capitalization. In this case, the taxpayer avoid the payment of tax through capitalization. Let's say, for example, nakay excess 1 million today, and then wala ka kabaloon, sali mo ng 1 million. So what you did, imo siyang gipalit og property, real property, let's say lupa. And then, the value of the property, the-increase. Nag-appraise siya, appraise. Kana siyang gain on the increase in the value of property. Actually, wala na siya tax because there is no realized profit. Therefore, wala kayo ba na tax. So, the income, is being capitalized, imo na siyang gibutang lang siya nimo sa kumbaga sa property na wala ka na taxan. So, it's a form of capitalization. Next, we have tax exemptions. There are many tax exempting laws today. For example, the one I discussed earlier is the BMBE, or the Barangay Micro Business Enterprises. So, this allows small and micro businesses to establish their small businesses, provided that they will hire the local residents of the place, and then as a consequence, exempted sila from the income tax. Another example is the non-stock, non-profit education institution. So, di ba, in the constitutional limitation we discussed earlier, it said that non-stock, non-profit education institutions are exempted from income tax and property taxes. So, it's also another way. Another is the senior citizens. They're exempted from the VAT. So, if ikaw seller, ikaw ang, example, Jollibee, and then, nakay customer, nga senior citizen, wala siya yung VAT meron nun. Actually, tagaan pa rin mo siyang discount ng 20%. So, that's tax exemption. And there are many other laws granting tax exemption pa, aside from those I've already mentioned. And the last tax avoidance scheme is the tax amnesty. From period to period, nagahatag si government og tax amnesty. What is a tax amnesty? A tax amnesty is a forgiveness of all your past liabilities. So, for example, in 2019 or last year, nag-grant si government o one-time tax amnesty sa mga estate taxes. So, katong tanan nga mga liabilities sa mga katong 1990s pa, 2000, nga wala pa nang bayaran, gi-forgive na ni government. Meaning to say, you'll only have to pay this much, and then all of the tax liabilities before that, especially sa estate tax, will be forgiven. The purpose of tax amnesty is to, kumbaga, activate nga part gihapon ka sa community. You have to renew yourself, kumbaga, gibunyagan ka usab. Aside from tax avoidance, so these are the tax avoidance or the legal ways, we also have the tax evasion or tax dodging. So sa tax evasion, as in totally, you don't pay the tax. So this is the illegal way. And this is prohibited. We are not learning this for you to practice when you become CPAs, but we are learning this today for you to be aware. So, these are fraudulent means to defeat or lessen the payment of tax. It is punishable by the law. So, there are certain elements of tax evasion. Number one, the end to be achieved. And in this case, it's the evasion, as in, you totally evade the tax. There is an accompanying state of mind described as an evil, in bad faith, or willful, or deliberate, and not accidental. So, di lang siya by mistake or by neglect. It is really intentional that you do or you did the evil. And the course of action, which is unlawful. So, the most common practice in reality, from experience, based sa, under declaration of the expenses. I mean, of the sales rather. So most companies ang ilang buhaton or some of the companies will not pay the correct tax by under-declaring the sales. For example, if their sales is 100,000, ang ilang i-declare lang is, let's say, 50,000. And according to our law, if you under-declared your sales by more than 30%, no, it is considered, or it will be considered as fraudulent, intentional. So, to address the tax evasion cases, the Bureau of Internal Revenue and the Bureau of Customs established some initiatives or actions or programs to minimize the evasion cases. We have the rate, the run after tax evaders. So in this program, kato mga dagko nga mga taxpayer, kada mga companies na as in ni buhat gid sila kaning mga butang nga di maayo, no? As in evasion gid siya. Nasakpan ni BIR. And then, what happened? Syempre, pabayron. If di makabayad, mapriso. And, kung naay rate si BIR, napoy rats si Bureau of Customs. Si Bureau of Customs, by the way, siya ang in charge sa kanang mag-import. So, kanang mga smugglers, muna ang mga ang priority, ang mga gina-target ni rats or the run after the smugglers. We also have Oplan Candado with the BIR. So, Oplan Candado, ang sarili mo na Oplan Candado? Oplan Candado is actually i-surveillance. I-survey mo. I-survey ang business. Kung kaniba nga business is na-issue resibo, kung kaniba nga business is nabagin na siya complete requirements, ipang paskin bagid niya sa iyang wall ang kanang ask for receipts because these are required. So, if you fail to comply with the BIR, ang imuhang tindahan, makandaduhan for 5 days. So, kung ang rate, ang run after tax evaders is for big businesses, mga big companies, kani pong Oplan Candado, ang yung mga target ka ng mga small businesses. Because, again, when you have a business na katindahan, you are required by the law to comply with the BIR's requirement. Number 1, issue og resibo. And then, aside sa resibo, dapat na kay books of accounts. Then, dapat nagabayad ka sa imuhang correct taxes. And then, dapat ka ng mga papers nga dapat i-dikit, ipaskin sa imong tindahan, dapat nakapaskin din na siya. So, the BIR will have first the covert surveillance. A covert surveillance is murag paskimpi lang bitaw. Like, for example, mag-send silang agent nga, okay, i-observe di siya nga tindahan. And then, di na silang pahibalo nga taga-BIR na sila. Ang ilaan na, magpalit-palit kunuhay, mangutana, unya mga agresibo, unya, kung di ka muhatag ana nga tawhana, dili lang i-record, dili na sila maingon nga ako taga-BIR ko, dili sila nga na. So, they will just buy like a normal buyer. So, if you happen to have an agent na gi-survey ka, then good luck. And then, after the covert surveillance, they will have profiling. No, they will investigate via social media, tanawan nila kung hala kanibagin siya o sa iyang status. Ang iyang gingon sa iyang income tax return, gamay na siyang income or lost siya, pero sige siyang travel abroad. So, it's somehow questionable, no? And then after that, they will conduct the overt surveillance. In overt surveillance, they will represent themselves really as employees or agents that they are. So they will check your papers, they will investigate your books of accounts. So if you don't provide them the documents, so valid ground na siya for the pagkandado sa imong tindahan. So careful mo ana. Careful sila ana. So that's Oplan Candado.